consent to dispense with the reading of the roll if we're in roll call?
Without objection.
Thank you, Mr. President. I ask consent to speak up for 15 minutes from time reserved on the majority side on this issue.
Without objection.
Thank you, Mr. President. This is a very important issue that we are debating today, and there are very different views about how we should proceed. And I rise to object to the Menendez amendment or bill that's on the floor and urge my colleagues to vote no. And I'd like to give at least 5 reasons why I don't think this bill is the right approach. It will not solve the problem of high prices at the pump, and why I think in many ways it's actually a waste of time to be taking a whole day on an issue that is not going to result in lower prices at the gas pump or in more domestic supply, which are 2 things that we really need to attempt to do sometime in the next short period. I have a great deal of respect for my colleague from New Jersey, as my colleague from California who spoke in favor of this direction, but I do want to give just a couple of thoughts about why I'm going to be voting no and urge my colleagues to do the same. According to economic analysis, the bill that Senator Menendez presents to us today to remove tax credits and subsidies from the 5 major oil companies will do nothing to lower prices at the pump. So as everyone goes to fill up their cars today, their trucks, their automobiles, their minivans, even if this bill passed, which it will not get near the 60 votes necessary to move it forward. It will not lower prices at the pump by 1 penny. I'm going to submit to the record information from independent economic analysis. It might make us feel better to beat up on big oil. It might, present a scapegoat in some quarters, but it will not lower prices at the pump. And that's what we need to be about, Mr. President, because this economy or economic recovery that we're in, slow and spotty in places, but underway, can be stalled out by prices as high as $4.37 a gallon. I saw at a station right here in the Washington, D.C. area. That's frightening to consumers, to families, to small businesses, and to large industries that are seeing their cost of business go up because of these prices. We should be working on real solutions. This is not one of them. According to the Joint Economic Committee report on this bill published last week, repealing these tax incentives, quote, would have little or no impact on consumer energy prices in the immediate future, and in the impact in the long term will also be negligible. So why are we doing it? Why are we harming an industry, 5 large oil and gas companies that work internationally, that employ 9.2 million people in the United States directly, that are good, hardworking Americans working in and for these companies? Why are we doing it? That is a good question. Number 2, the industry pays its taxes and then some. I think there is some real misunderstanding that these large oil and gas companies pay either little or no taxes. Maybe people have been told and believe that they have so many tax subsidies that they don't pay taxes, and I want to put that issue to rest. First of all, 3 companies, ConocoPhillips, Chevron, and ExxonMobil. I don't have this blown up, and I'm sorry because I'd like to. I don't know if the camera can pick up this small 8 by 10 or 8 by 11 sheet here. But you'll see the red lines here. Conoco, Chevron, and ExxonMobil paid approximately 49%, this is their tax rate, 43% and 42%. I think that's pretty high. Now they're making billions of dollars. That is true because prices are high and supplies, there's an increase for demand. That's, the American way. That's the profit incentive. I know people are angry that they're making these profits, but they're paying significant amount in taxes. In fact, these companies pay more than $86 million to the federal government in income tax and production fees every day. $86 million today, $86 million tomorrow, and the next day, every day. So the fact or the thought that they're not paying their tax, that they're hiding behind some extraordinary loophole in the, loopholes in the tax code, it just doesn't measure up. Now, Mr. President, people might say, well, Senator, what are these blue lines on your sheet? I'd like to tell them what these blue lines are. This is Walmart. Walmart's a big company. They make a lot of money. They're in all of our states. You know what their tax rate is? 33%. You know what Berkshire Hathaway, one of the most successful investment companies, they make tons of money, have profits for shareholders. They've made thousands of millionaires, and congratulations to them, people that invested in Berkshire Hathaway. They've made millions of dollars. One of the most respected, Warren Buffett's one of the most respected investors. I personally have a great deal of respect for him. You know what their tax rate is? 31%. What is Intel? Intel is one of the largest companies in the world, 27%. Philip Morris, a tobacco company, 27%. IBM, 27%. All the way down to telecommunications companies, Verizon, Coca-Cola, 21%. All the way down to GE, one of the largest companies in the world. You know what they paid last year? 9%. In fact, people were shocked, I being one of them, that GE paid zero tax to the federal government last year when these 5 big companies are paying $68 million a day. Okay, GE paid nothing any day, all year, zero, and these 5 oil companies are paying $68 million a day, and we have to have this discussion? Now, should some of these subsidies be looked at? Absolutely. When should they be looked at? In the Finance Committee, when these other industries, both oil and gas and non-oil and gas, resource-based and not, both retail, telecommunications, and software companies like Intel, Microsoft, et cetera, let's look at all the subsidies in the tax code. I will be the first to stand up and say many of these subsidies, or some of them, need to be eliminated, particularly when the taxpayers are looking to close the deficit and reduce our debt. Most certainly we need revenue. Should this be on the table when that serious, thoughtful, deliberate debate happens? Yes. But today, this is entertainment. And it's really not funny, and it's not laughable. It's very serious. So I'm going to submit this to the record. These are all the large companies, these 5 large oil companies that everybody enjoys beating up on, and I understand that they are making a lot of money today. But this is no reason to go after them, singling them out, particularly because of the 9.2 million Americans that are working in and around and for them, and the thousands of independent companies and suppliers that work in partnership with them. Let me give you the third reason. This approach undermines domestic production. According to the EIA study published in 2008, oil and gas industry received about 13% of the U.S. subsidies. If you listen to this debate on the other side of the aisle, which is this side, on this side of the aisle, you would think that they get all the energy subsidies and they just don't need them, prices are high, and they can make a lot of money drilling. The facts are that of all the U.S. energy subsidies, the oil and gas companies, the big ones, get only 13%, but they provide over 60% of the energy. So for 13% of the subsidies, they get 60%. They produce 60% of the energy. Now, unfortunately, while the U.S. was at an all-time high of oil production, the EIA, which is the Energy Estimate Agency, now estimates U.S. production will decline to 1.14 million barrels of oil a day by the year 2012. The last time this country produced less than 1.2 million barrels of oil was in 1997, more than 10 years ago. Now, Mr. President, everybody says, including the President, the Secretary of the Interior was before our committee today, and they tout oil production as an all-time high. They are correct, but it's only half the truth. Because if you just flip the page or look to the next chapter, what you're going to see is this production is declining precipitously for two reasons. We have almost shut down drilling in the Gulf. There's been virtually no new exploration and production because of bureaucracy and delay. And attacks like this don't help. We need to be increasing production, not decreasing it. So the truth is we are at an all-time high, but we won't be for long. We're going in the wrong direction, which is why I want to commend the President for saying that he wants to step up domestic production. We couldn't step lively enough for me, so I'm hoping that that's what we can do and move on. And I see my colleague on the floor, so I'll try to finish up in just 2 minutes. The fourth reason is this bill does hurt independent producers. While I'm happy to see that this main attack is not directed at independents, which would be a terrible thing. It's pretty bad at the big companies. It would be just devastating if it was to independents. But it does affect independent producers because many of the independent producers, of which I represent many of them, some of them are in West Virginia, some of them are in Texas, some of them are in Oklahoma, some of them are in Pennsylvania, some of them are in New York. So I'm not the only senator here that represents lots of independents in oil and gas, wildcatters. It's a very proud tradition where we come from. Many of them have partnerships with the big oil and gas companies. And the money and the resources that they have go into supporting those partnerships with those independents. So indirectly, this does affect independent producers. And finally, this bill gets our energy and job priorities backwards. One more provision in the bill I'd like to speak to says the economy of the U.S. suffers huge net losses in jobs and productivity from growing annual trade deficits in energy due mainly to the $250 billion or more we pay foreign oil. I understand that we have a trade deficit for foreign oil. So why are we doing something to diminish domestic production right here at home? That's what this bill does. So these are 5 reasons that I'm going to vote against the bill. I urge my colleagues to do the same. This industry contributes a lot to our economy, and if this country would make it a priority to increase domestic production, to reduce our foreign consumption, we would reduce that annual trade deficit and do right by our people. So there are many other things I'd like to say, but we're restricted on time. I'll submit the rest to the record. But, Mr. President, I can only say that we need to be producing more at home, producing it safely, producing it equitably. And finally, when we want to review tax subsidies across the board for all big companies, I'll be at the table. Until then, I'm going to sit at this seat and vote no. Thank you.
Mr. President.
Senator from Oregon.
Mr. President, before she leaves the floor, I just want to say to my seatmate on the Energy Committee that I'm looking forward to working very closely with her on a host of these issues. I think you are spot on with respect to the concern of the independents. This morning we talked some about natural gas where there's enormous potential. I just want to assure my friend and colleague I'm going to be working very closely with her. Mr. President, let me start by discussing briefly what happened in 2005. Then President George W. Bush went and spoke to the American Society of Newspaper Editors. It was at their convention in 2005. Mr. President, then as now, energy was a very important issue, obviously central to our economy. And President George W. Bush made some very important remarks, in my view, at that convention. And I'd like to just read briefly what President Bush said to the convention that he spoke at, because on energy he said, and I quote here, "One of the initiatives that I will push again is to get an energy bill out. I will tell you with $55 oil, we don't need incentives to oil and gas companies to explore. There are plenty of incentives. What we need is to put a strategy in place that will help this country over time become less dependent. It's really important. It's an important part of our economic security, and it's an important part of our national security." Now, Mr. President, George W. Bush was right then, and he is just as accurate today. His comments with respect to the importance of an energy bill to our economic security and national security, in my view, is indisputably, accurate. And because the President, who of course comes from oil country, been an oil man himself, took this position, I thought it was important to look at that in the context of where we're headed in terms of our country's energy policy. So we had a hearing back then in 2005, and we had all the major oil companies with us that day, the executives. In fact, one of them, who was before the Finance Committee last week, Mr. Mova, also was there in 2005. And I asked each of the executives of the 5 major oil companies, Mr. President, whether or not they agreed with the statement that George W. Bush had given to the American Newspapers Convention. And all of the major oil companies testified at this joint hearing that they agreed with President George W. Bush. They said they did not need any incentives. And, Mr. President, there were no qualifiers, there were no caveats, there was no this, there was no that. The 5 major oil companies, through their CEOs, said that they didn't need any incentives to explore for oil. Period. End of discussion. So I thought it was important to get that on the record, to compare it to their views now. And, of course, last week in the Senate and Finance Committee, on which I'm honored to serve, we got a very different story. In effect, the CEOs did an about-face, and frankly, Mr. President, they did it with a pretty straight face. Each of them defended the $2 billion a year in tax breaks that they specifically get for exploration and drilling. These are industry-specific, tax breaks. I know there's been a lot of confusion in this discussion. Is this effort somehow about something that other people get as well? Why don't we move on to tax reform? Boy, I don't take a back seat to anybody on this tax reform issue, Mr. President. Been involved in the first and only bipartisan tax reform efforts in the last quarter century with our former colleague, Senator Gregg, and now Senator Coates. So tax reform is certainly crucial. But now we are talking about industry-specific, tax breaks, and the 5 major oil companies who said they didn't need them in 2005, and in fact basically said they didn't even get them, now say somehow if they don't continue to get them, we are going to have enormous economic problems. Now, these are not just plain old tax breaks. Tax credits like expensing of intangible drilling costs under Section 263 of the tax code, and amortization of geological and geophysical costs, Mr. President, under Section 167 of the code are in fact not available to every American business. So we're talking again about specific sections of the tax code. I mentioned 2, Section 263, Section 167. These oil and gas, provisions, which President Bush in 2005 said that they weren't needed. The executives said in 2005 they weren't needed. They are not, Mr. President, like every other tax business provision. How many businesses do we know have expenses for oil drilling that aren't in the oil business? At the Finance Committee last week, the CEO of Chevron said that the intangible drilling tax break was like the research and development tax credit that all other American companies get. Mr. President, that's not accurate. First of all, as I reminded that CEO, oil companies also get the R&D tax credit. When they have legitimate R&D expenses, they can claim the credit. If intangible drilling costs were just like research costs for the oil industry, they would be getting 2 tax breaks for the same thing. That would be double dipping at taxpayer expense. In reality, as the major oil companies know, building access roads to bring in drilling rigs, which is the kind of thing that is covered by the intangible drilling provision, is nothing like the research and development tax incentive. It's the cost of doing business. In their major business, drilling for oil. What's more, the tax breaks for these kinds of expenses are usually spread out over a number of years, but with expensing, Mr. President, of drilling costs, the oil companies get to write off these costs in the first year. They not only get extra tax breaks that other companies don't get, they also get to claim these breaks sooner than would other types of businesses. Mr. President, it simply defies old-fashioned common sense to claim that the tax incentives that oil companies get for exploration and drilling costs, which they didn't need when oil was $55 a barrel, somehow today become essential when oil is at $100 a barrel. Even if you adjust for inflation, today's oil price is $30 to $40 a barrel more than it was in 2005. Not a couple of dollars more, but substantially more, no matter which of the inflation indices you use. Just so there was no confusion about what was said in 2005, I thought it was important to actually look at that video. And as I indicated, Mr. President, each of the CEOs of the major oil companies reversed their position from 2005 and said those billions of dollars in tax breaks were essential if they were to continue to drill for oil. Now, in 2005, the price of gasoline at the pump had soared to what was then a record high. Today, the price of gasoline is just below the all-time high price set in 2008. Then, as now, the oil companies are reporting record high profits. So, Mr. President, both in 2005 and today, the oil companies have high prices and certainly record profits to incentivize them to drill for oil. So the question then is, what's changed from 2005 to now to continue justifying providing these major companies with taxpayer subsidies? And I want to just spend a couple of minutes unpacking a couple of the arguments we heard at the Senate Finance Committee, Mr. President. Last week at the Finance Committee, we heard from the CEOs that oil was getting harder and harder to find and that they faced increased global competition. Now, if anything, U.S. oil supplies and prices are less tied to the global market now, and new oil supplies are easier to find than they were in 2005. After declining steadily since the mid-1980s, U.S. oil and natural gas production has begun to climb since 2008 due to new onshore discoveries in shale formations and development in the Gulf of Mexico. As the distinguished President of the Senate knows, we have a great interest in this question of natural gas and discussed it this morning in the Senate Energy Committee. The location and technology for getting oil and gas, especially from these onshore shale formations, has not only dramatically increased U.S. oil and gas reserves, but the technology is now sufficiently well established that U.S. oil and gas production is rising and rising rapidly as a result. According to a recent analysis by the U.S. Energy Information Agency, oil production from the Barnett Shale Formation in Texas, literally in the backyards of the headquarters of some of the companies we heard from last week in the Finance Committee, oil production from that Barnett Shale Formation in Texas has tripled since 2005. In North Dakota, oil production from shale has gone from next to zero in 2005 to 240,000 barrels per day and is expected to continue to grow. In 2010, production in the Woodford Shale in Oklahoma increased 42% between 2009 and 2010. So I could go on with this, but in one area after another, significant increase in production. In fact, the total U.S. oil production has increased over 10% since hitting its low point in 2008, and the Energy Information Agency projects that because of increased production in oil shale and in the Gulf of Mexico and other sources, it's going to continue to grow. U.S. oil prices are also less tied to global markets and competition now than they were in 2005 because of increased U.S. production and increased Canadian tar sands production that is pouring into the U.S. market. This ought to be of no surprise to the major companies who testified last week, because each of them has also made significant investments in the Canadian tar sands project. According to the Wall Street Journal, in 2009, Exxon announced that it had acquired more reserves than it had produced for the 15th straight year, and that half of those new reserves, 1.1 billion barrels of crude, were from a single Canadian tar sands project which it was developing. That's a topic certainly for another day. I see my friend from Oklahoma on the floor, but Canadian tar sands developers are so concerned about the oversupply of tar sands oil to the North American market that they're pushing to build a new pipeline, the Keystone Pipeline, to the Gulf of Mexico that would allow them to export crude and refined products to other markets. So the argument that it is just too hard to find new sources of oil simply does not hold water. Further evidence of just how much the U.S. and North American markets are being disconnected from global competition by these developments is the fact that the benchmark U.S. oil price, West Texas Intermediate, has been selling for $10 and $20 a barrel less than the benchmark for European oil. If supply was as tight here in the United States as some of the majors told us last week, there wouldn't be such a discrepancy in prices. Last point, Mr. President, the Senate will certainly be hearing arguments that the loss of these tax breaks is going to drive up the price at the pump. And this is obviously very much on the mind of every senator when our people are struggling to pay the already steep cost of filling their tanks. At the 2005 hearing, I also asked the CEOs about ending these tax breaks on their companies, and several of them said it wouldn't affect them or it would only affect them minimally. For example, the CEO of Exxon said, and I quote, "As for my company, it doesn't make any difference." The Chevron CEO said, and I quote here, "Ending these tax breaks would have minimal impact on our company." And the CEO of BP said the same thing. It's a minimal impact on us. Again, common sense would tell you that major oil companies earning combined profits of close to $32 billion in a single fiscal quarter would not suffer a big economic impact from the loss of those industry-specific tax breaks that I have been talking about. And they're certainly not going to stop doing business with prices at $100 a barrel. In an important moment last Thursday, Mr. President, our colleague Senator Cantwell asked the head of Exxon what the price of oil actually should be today, with all other things being equal. And Mr. Tillerson said, the head of Exxon, price of producing the next marginal barrel of oil was probably between $60 and $70 a barrel. That is $30 to $40 a barrel profit at current prices. It's simply not credible to think that these companies would significantly change their investment decisions if they lost these tax breaks, and the Congressional Research Service in a report last week concluded exactly the same thing. I began my remarks this afternoon, Mr. President, by quoting George W. Bush at the Newspaper Publishers Convention in 2005. He said that the companies, the major companies, did not need incentives to drill for oil at that price. I continue to ask how in the world, given George W. Bush's comments in 2005 and the other considerations I've outlined here, that again, prices are way in excess of inflation, again, profits are at a record high, how in the world can you justify getting industry-specific subsidies when George W. Bush said that no incentives, and he said it without a qualifier and with a caveat, were warranted if you wanted to drill for oil? I hope my colleagues, as we move to this vote, will keep in mind the words of George W. Bush then. In my view, they are even more accurate today. Mr. President, I yield the floor.
Mr. President. Senator from Oklahoma.
And first, I'd ask consent that the order for Republican speakers include myself and Senator Blunt, and the order for the Senators McCain and Chambliss be vitiated.
Without objection.
I'm pretty amused at what the Senate's doing. We sit here with a $1.6 trillion deficit, and we're running bills based on political philosophy rather than what the real problems are in front of our nation. You know why oil is expensive today? It's because the dollar's on its back, and oil's priced in dollars. And if you want the price of oil to go down, like it has this week and the tail end of last week, is you want the value of the dollar to go up, because the world trades oil in dollars. Why is the dollar down? The dollar's down is because an incompetent Congress continues to spend money that we don't have on things that we don't absolutely need. And if you want the dollar to improve in value, what you'd have to do is hold the Congress accountable for doing what they were elected to do, which is live within our means. And we can't come together and solve the very real problems. You realize that if, in fact, our deficit wasn't $1.6 trillion, but about $600 billion, the price of the dollar would shoot way up and the price of oil would go down. Now, we hear all these stories. I get all these letters from all of my constituents to say, well, you got to eliminate the commodity speculation. We can do that in this country. We can say you can't speculate on oil unless you can take delivery. And that will do nothing to the speculated price of oil, because oil is an international commodity. And people are always going to speculate on what they think the price of a needed commodity is going to be. So if we controlled all the economics in the world, we could control that speculation, but we can't. What we do know is price controls don't work. They don't work at all. So if, in fact, we want to fix the price of oil, what we have to do is fix our economic mess here and strengthen the dollar, which will lower the price of oil and lower the price of gasoline. The debate we're going through here is all about politics, creating somebody that's bad. Do you realize the 5 big oil companies make less than 8% return on their sales? They make a lot of money, but they're giant companies. But compared to most other of the S&P 500, their return on sales is far less. And they're not making record profits. They made record profits when oil was 142. That's when they made record profits. It's this terrible habit we have of saying, and let me draw a corollary. If I'm an Iowa farmer, or from Indiana or Illinois or Oklahoma, and I have a great corn crop and the price of corn is $4, and I decide not to sell my corn, right? I decide not to sell it, and now all of a sudden corn's $6.80. Oh, I'm going to sell it now at $6.80. Now, what are we going to do? Are we going to penalize that farmer for having a resource that he took a risk on and not selling at a higher price? We're going to say, wait a minute, we're going to double or triple tax you? The other thing that I'm amazed at, you know, most people know me as a doctor, but I spent 10 years as an accountant and business manager. I have a degree in accounting. And the lack of knowledge of my colleagues on American standard accounting principles is amazing. Every benefit they're talking about taking away won't go away, because they're all legitimate business expenses, and they'll all be expensed. Why did the Congress back in 1906 give this advantage to our oil companies? Why did they do that? Because drilling for oil is a capital-intensive business. And if you want more oil found, what you have to do is be able to generate the internal rate of return to put that capital in. So we offered accelerated write-off for expenses. Now, it's interesting that we're not going after all the oil companies or all the gas exploration. We're only going after the big five. Why is that? Because my colleagues know that if you did the same thing to the ones that are actually producing most of the gas in this country, all the new technology, which the R&D tax credit and the intangible drilling costs allowed to be developed that makes this country with 100 years worth of natural gas would go away. And the smaller and medium-sized oil companies will never be able to have the capital to continue to perform and raise our level of energy resources ourselves. So what you're hearing on the floor is a charade. The price of oil is high is because the dollar's weak. Now, if you want to punish somebody for that, punish the U.S. Congress, punish the Federal Reserve, punish the executive branch, but don't go after somebody that's going to create 90,000 new jobs in our country this next year. We always look for the right political moment to make somebody look bad. Well, the people that look bad is the U.S. Congress, because we don't have the guts to stand up and say we need a cogent energy policy that says we're going to go after our own resources, we're going to use every asset we have to utilize cleanly and friendly the tremendous reserves that we have in this country. We know we have 160 billion barrels of recoverable oil in this country. They're not proven, but that's what the estimate is. We're the third largest oil producer in the world. We could become the second largest oil producer in the world if we had a cogent government policy and environmental policy. We have oil out the kazoos. We're going to find more oil as we explore for more natural gas. Right now, we're only importing 47%. 47% of our oil needs. It was 65% less than 10 years ago. Why is that? A part of it is smaller demand because we've been in a recession, but the vast majority of it is the very technology that they want to deny the fast write-off for is what has created gas liquids that have filled the void. It's better than the best crude oil in the world. And that's coming out of North Dakota. It's coming out of West Virginia. It's coming out of Oklahoma and Texas. Great stuff, easy to refine, cheap gasoline in terms of the cost to get it from a product to a product we can use. So I'm pretty well disgusted with what I'm hearing on both sides of the aisle, because the real problem is not the price of oil. The real problem is the price of the dollar. And if we will fix that, we'll fix tons of things that help our economy. But we're recalcitrant to the point we won't do the things that we need to do. Our government's twice the size it was 11 years ago. 2 times the size. No wonder we're running a $1.6 trillion deficit. No wonder that we don't have the effect. We have the largest number of regulations to ever come out of any administration in the history of the country in the first 2 years of this administration. It is killing job formation. It is causing people not to invest. It is causing a lack of economic growth in our country because we have people making decisions that have no idea what they're doing or what the ramifications of those decisions are. They're lawyers whose first creed is don't do what's best for the country, do what's safe for the bureaucracy. That's how we're running this government today. We have 45% more regulations issued in the first 2 years of the Obama administration than anybody else has ever done. And we wonder why we're not getting job creation. We continue to refuse to debate on the Senate floor the very real issues that are in front of this country. The very real issues like what part of government can we do but without? How do we get a future for our children? The fact is we've lived the last 30 years off the next 30 years of our kids. And that bill is due. It's not due a year from now, it's due now. And we're tied up in knots because we have this false indication that a debt limit means something. If a debt limit meant something, we wouldn't be raising the debt limit. It would say we would quit borrowing. But instead, every time we come up to the debt limit, we're asked to raise the debt limit. We won't make the hard choices of what part of government is not valuable in light of the fact that we're cutting the legs off from under our children and our grandchildren. So this debate, you're going to hear a lot of finger-pointing about what's bad with big oil, what's bad with oil, what's bad with the price of gas. What's bad is Congress isn't doing its job. We're not addressing real issues and solving the real problems in front of this country. With that, I yield the floor.
Mr. President.
Senator from Kentucky.
Sports teams often have a motto. They want to describe how they're going to win the event. Well, the Senate Democrats have a motto, and it goes something like this: I'm from the government, and I'm here to help. Well, beware when your government comes to help. They've figured out that there's a problem. The problem is that gas prices are rising, and people are being hurt by the rising prices. Actually, if you measure inflation the way we did back in the 1970s, we've got inflation of 10%. Senator Coburn's exactly right. It has to do with that we're losing the value of our dollar. Our dollar is going down in value because we spend money we don't have and we're running up these enormous deficits. But it is a problem nonetheless. But those who believe that government is always the answer are rushing to rescue you from high prices at the gas pump. But they haven't even diagnosed the problem, so they're going to come up with the wrong solution. Their solution is to raise taxes on oil companies. Do you know what taxes are? Taxes are simply a cost. If you run a business and I raise your costs, you'll raise your prices. So let's see, prices are too high, so we're going to raise the cost, which will raise the prices further. Makes absolutely no sense. But it's because their motto is wrong. Their motto is, I'm here from the government and I'm going to help you. Their motto is, it's the government that's going to solve your problems. But they're going to solve your problems by compounding your problems. The price of gasoline is a problem. If you include the price of gasoline and the price of food in the CPI, it'd be 10% or higher. People are struggling to pay for gas. What are the main things that people pay for who are just getting by? Their gas, their food, their rent. So how are we going to make it better? We're going to make it worse before we make it better. We're going to raise the cost of the oil companies by raising their taxes, which means you'll pay more at the pump. It is economic illiteracy, and it is what's wrong up here in Washington. We still have too many people who don't understand the basic economic realities. If you raise costs on a business, if you raise taxes on a business, you will raise prices at the pump. Now, the interesting thing is there are some answers. They say, well, let's go after those greedy oil companies because they're making a profit. Out of every dollar you... Well, you know what? If you eliminate profit, you won't have oil companies. Everybody works for a profit. We all work harder because we want to maximize our profit. Well, who owns the oil companies? Is it a bunch of greedy rich people running their fingers through files of gold? Are they Midas in some room full of gold? You own the oil companies. I own the oil companies. You have a 401k, you have an IRA, you have a mutual fund. You own the oil companies, okay? Corporations are owned by people. Now, do some people make a lot of money in the corporations? Yes. But if we limit that or try to obscure that or try to get rid of profit, you'll get rid of companies. And then where will they go? They'll go overseas. Oil companies are international. Make it hard for them to do business here, and they will flee our country, and they already do. We have high corporate taxes in our country, and so they keep their profits overseas. Lower corporate taxes. Don't raise taxes. Lower taxes. People will bring their profits home to the United States. This is their profit. The oil companies make about 7 cents on the dollar. How much does the federal government take? Federal government takes 18 cents of every dollar. You want to have lower gas prices this summer? You want to help the people who are struggling? Let's have a gas tax holiday. It's only a short-term solution, but let's get rid of the 18 cents for the next 4 months through the summer season. It'll cost the Treasury. There'll be less money coming into the Treasury, $10 to $12 billion over 4 months. Let's take it from somewhere else. We're spending $30 billion a year in foreign aid. This is money we give away to other countries so they can build schools, so they can build bridges, so they can rebuild their infrastructure. We give this away to foreign countries. A lot of times it winds up in the hands of foreign leaders who simply steal it. Mubarak was said to have gotten $60 billion over 30 years and accumulated at least $5 to $10 billion that we can count that he stole. Many of these dictators throughout the African nations, as well as throughout the rest of the world, have simply stolen our foreign aid money and used it for their own personal aggrandizement. Let's eliminate the gas tax. Let's take the money from foreign aid and let's give it back to the American people who've worked hard to earn it. Can't do this forever, but you could do it for 4 months and pay for it by getting rid of foreign aid. That would help people. That would lower the price of gasoline, and that would be a stimulus to the economy. So what I'm saying is let's have a gas tax holiday. Let's eliminate federal taxes for the next 4 months on gas, and let's take the money that would be lost, put it into the highway fund, but let's take it from money we're giving away to other countries. That would be a short-term answer. There's also a long-term answer. Senator Coburn was right that much of the price of gasoline rising is from inflation. Basically, we're destroying the value of the dollar. But there's another reason gas prices rise, because demand for oil and gas is outstripping the supply. Now, why don't we have more supply? Because the current administration is basically an enemy to production, an enemy to drilling, an enemy to all things related to energy. We now are going back and looking at permits to mine coal that have been approved for 10 years. We are taking away drilling permits to drill for oil in Utah, in Alaska, off our coasts. If we want gasoline prices to be less, if we want to send less money to Middle Eastern countries that hate us, who we have to buy oil from, let's make more here. Let's drill for oil. Let's produce more here. Let's drill in Alaska. Let's open up new places to drill. Can we do it responsibly? Yes. Nobody wants to damage the environment. Do it responsibly, but let's produce energy here. We have, as Senator Coburn says, 160 million barrels of oil waiting to be extracted. Let's go for it. But we have to have a government that's friendly to energy. We have a government now, an administration, that is unfriendly to energy, and at every aspect of producing energy places roadblocks. They think, for some reason, that we can get electricity to supply our country from some windmills that are made in China. What we need is we need oil and gas production in our country. We need nuclear energy in our country, and we need coal in our country. We have the ability, we have the resources, but we need to get government out of the way. Instead, what we're doing is placing new obstacles. There will be a long-term solution that Senator McConnell and our party will introduce. I will support that also. It will encourage domestic production of oil and gas, domestic production of energy. That's what we need. But you're not going to get it until we have new faces here in Washington, because the current crop of faces are opposing production at every turn. So I'd like to conclude by saying that if you want to help people, even for a short period of time, that there is a short-term solution. Let's get rid of the gas tax for 4 months. Let's pay for it by not sending the money overseas to have other countries either steal it or build their own infrastructure. Let's keep those U.S. tax dollars here at home. Better yet, let's keep them in the pockets of the consumers by having a gas tax holiday. Thank you very much, and I yield back the remainder of my time. And suggest the absence of a quorum.
Clerk will call the roll.
Mr. Akaka.
President.
Senator from Missouri.
Madam President, I rise to support the legislation that is going to be voted on in just a few hours, and I have listened to the last couple of speakers.
The Senate is in a quorum call.
I ask that the quorum call be set aside.
Without objection.
I've listened to the last couple of speakers, and while I certainly respect Senator Coburn's commitment to fiscal responsibility, and he and I have worked together on a number of projects in that regard and have the same view of many of the spending habits around here, I've got to say I'm a little confused by the opposition to this legislation by my friends across the aisle. You know, we have two ways to spend money around here. One is through the appropriations process. The other is what I call tax goodies. And what these goodies are, they're called tax expenditures. And what these do is they basically say to whatever group has successfully lobbied for them, you're not going to have to pay all your taxes. So there's two ways that we deny the Treasury money. One is by spending money. The other is by telling people you don't have to pay the money that the tax code says you owe. And we put into the tax code special deals. Now, many of those special deals are done because the case is made that they spur economic development or they spur some kind of activity in our country that we think is desirable. A good example is the interest deduction on people's homes. The notion is that we want to encourage people to buy homes so that we allow them to deduct the interest they pay on those home loans against their income tax. Charitable deductions are another good example. We want people to give to charities, so we say, you know what, you don't have to pay as much in taxes if you give to charity. The real estate sector is full of tax goodies for development of real estate and the creation of jobs that goes with the development of real estate. One of the big tax expenditures we have in our tax code are goodies for big oil. And that's really what this is about. Now, can we get to where we need to be on our structural debt and our annual deficit without touching the tax code? No way. No way. Are we going to have to look at revenues for multimillionaires? I think we are. Are we obviously going to have to look at spending? Of course we are. And aren't we going to have to look at the tax goodies? Well, I would sure hope so. Because frankly, as some of my colleagues across the aisle have said, and I thought they agreed with us, that cleaning out some of those goodies could potentially lower taxes for everyone. So where do we start with the goodies that are in the tax code? Might we not start with the most profitable companies in the history of the planet? Do they really need this extra money that we give them by telling them they don't have to pay the taxes that other companies have to pay? How many quarters will we have where we read the headlines, record-breaking profits for big oil? How many times are we going to read that before we are willing to take the baby step, just the baby step of saying, you know, maybe these tax goodies for big oil are not a good idea in light of our deficit and our debt. Maybe this is a good place to start. They made north of $35 billion in the last 3 months. Now, I know that there's all kinds of things that are being put out there to kind of hide behind as we cast this vote, because this is a tough vote, I think, for people who vote no. How do you explain to your constituents that are struggling around their kitchen table to figure out how they can afford to drive their kids to soccer practice? How do you explain to them that we think that instead of $125 billion, instead of $123 billion of profit big oil is going to make this year, they need to make $125? That's what this is. Instead of making $125 billion, north of $125 billion of profit this year, big oil is going to have to really suffer along with only $123 billion in profit. And that $2 billion that we want to take back from them is going to go towards the deficits. How do you explain that to people around their kitchen table? Now, oh, this means the cost of fuel is going to go up. You know, everyone has debunked that. Really? Cost of fuel has gone up just fine, and they've got all those subsidies. I remember when oil was $55 a barrel and they had all those subsidies, and by the way, all these subsidies didn't help them go out and do what they needed to do to keep the price of fuel down. And by the way, just today, a letter was sent to the FTC by myself and other members of the Senate saying, what about this refinery process? You know, talk about economic illiteracy. Anybody who believes the oil companies today are making 7 cents of profit on a gallon has no idea what's going on with refineries right now. A year ago at this time, refineries were operating at a capacity of close to 90%. Today, they're only operating at 80%. Now, why would that be? Their profit per gallon of gas, just the refineries, has gone from less than 40 cents a gallon to 80 cents a gallon in a matter of a few months. 80 cents a gallon of refinery profit. Now, some of these refineries are independently owned, but many of them are owned by the Big Five, Big Oil. So why is that capacity down? Is it because they don't have crude to go through the refining process? No, there's plenty of crude. And how about this? We are giving these big oil companies tax goodies, and what are they doing today? They're exporting a record amount of oil and fuel from the United States. Exporting. They're sending it to South America and Mexico. So while my constituents are suffering mightily at the gas pump, week after week after week, these guys are sending the oil they've produced with our tax goodies to another country instead of putting that additional supply into our supply chain, which in turn reduces the price. The more supply, the less the price. So, one, they've cut back refining capacity. Two, they're exporting more. And they want to say it's about drilling? Really? We got more rigs drilling right now in this country than we have in many years. We have production higher at this point, domestic production higher than it was at the end of the Bush administration. We just issued 12 new deepwater permits in the last few months. There is all kinds of leases out there that are not being explored. Meanwhile, cha-chink, cha-chink. These big oil companies are continuing to make profits that just make your jaw drop. So, honestly, how seriously, you talk about economic illiteracy, I'll tell you what economic illiteracy is thinking that these companies, what about the free market I always hear about from the other side of the aisle? What about that free market? Why do they need our tax goodies to help them if this is truly a free market? And maybe they're right. Maybe we shouldn't pick on big oil. But what a great place to start. Frankly, if we can't take these things away from the most profitable companies in the history of the planet, how are we ever going to take them away from the mohair industry? Or how are we ever going to do what we need to do with the tax code in the real estate sector? Or any of the other goodies that we have larded up our tax code with to make it so complicated and so long that, frankly, the people who get the most advantages out of it are the families who can't afford to hire accountants and tax lawyers. Meanwhile, the real tax rate for most Americans is much higher than the real tax rate for most multinational corporations. So I think economic illiteracy is to spend a lot of time talking about the debt and deficit and not willing to take this baby step to take back $2 billion a year that these companies get that they don't need and they're not using to hold down the price of gas. I mean, when I realized how cynical this whole process had become is when today I got a question from a reporter that said, well, the oil companies say that most of these profits are going to these pension companies. Give me a break. You know, really, these guys want to talk about free market and how this is all about the bottom line, and then they want to try to hide behind the fact that some of the pension funds have stock in their companies, that somehow that justifies them feeding at the public trough? Talk about greed. Talk about greed. So I think this legislation is a real litmus test. Because if we can't do this, then I question what we can do to right this ship that is all about the footprint of the federal government, how much money we're spending, and how many tax expenditures are out there. And anybody who tells you that this is about raising their taxes, no. This is about saying to them, you've got to pay the taxes that the free market says you should pay, not avoid taxes by these extra goodies. This isn't about raising their taxes. This is about saying you need to pay your taxes like average citizens do as it relates to their businesses. You shouldn't get this extra help in the tax code that allows you to avoid taxes. It's a tax expenditure. It's real money that will come to our bottom line as it relates to our deficit, and it's important to get it done. And, Madam President, I yield the floor.
Madam President.
Senator from Texas.
Madam President, I would yield myself up to 15 minutes.
Without objection.